Hello, everyone. Welcome, welcome, welcome. Hello. I can see that some people already joined. Actually, you were waiting for me. I'm glad for it. So NFP Day, and actually today we have. Oh, sorry, I had the YouTube open. So today is a pretty uncertain session, to be honest. Um, and I can see that even you can see in the reactions of in the performance so far that we can see the market performance that we have seen so far, that indeed is not uncertain just for me, but it seems that it's for the majority of our market participants. The thing is that today we have the NFP, which, as we always say, is one of the most volatile releases, if not the most volatile release of the month, of every single month. However, this time we don't have clarity, and we need clarity, but not only from the NFP, but in general from the US government and the US economy, but mainly the government this time. So we seek for clarity from the tax policy perspective, tariffs perspective, spending bill perspective. I mean, there are a lot of going on that affect the markets, and actually they don't make it easy, neither for the central banks, neither for the markets and the market participants to interpret what should be the next move, what should be what market conditions. Actually, what's this all this uh, mixed situation, how it could be interpreted, and how could affect the economy. That's why we have seen a bit of I will say steadiness. Yeah, steadiness is the key for the dollar, at least so far today. It was pretty steady since this morning, ignoring the short-lived fluctuations that we have seen. But mainly today is just stuck between 96.30 to 96.60. I'm gonna come in a bit and share the charts with you in order for you to see as well. But before we move and scan, let's say, our instruments, I would like firstly to because we have plenty of time until the NFP is out. We have 15 minutes. I would like just a bit to see what is expected. Okay, what is expected. So okay, as you know, we have seen like sweeping, let's say, policy actions, right, in general in the US from the very, very first moment that Mr. Trump officially appointed. This week the market moving is pretty good. Yeah, but today, I mean, ahead of the NFP, it has been really tricky to let's say to speculate how the market could react on the NFP release. So definitely I will not disagree with you, dear Bitcoin team. Actually, the whole year we had a lot of volatility, nice moves, clear trends. So in general, the 2025, from a technical perspective, at least, we had clarity in regards to the trends, at least. But yes, today we had a bit of a cautiousness ahead of the NFP, even though I've seen that Euro actually gained significant ground. I'm going to share the screen anyway. Yeah, so I've seen that the one that benefited ahead of the NFP, it was we could see that it was a bit of the Euro. I mean, we've seen a pullback, like the last 3 hours in a row. Yeah, the last 3 hours ahead of the NFP. So it found some ground. Nonetheless, I don't want to waste a bit. Let me very, very briefly explain what's going on. Okay, so we have the ADP number today. there are some analysts claiming that I'm expecting 110,000. Some others expecting 130,000, but somewhere there. However, the ADP number, by the way, yesterday it was a bit weaker than expected, so it had some kind of it pushed some indicated, let's say, a downwards risk for jobs today, even though lately we tend to ignore ADP because the correlation with the NFP is not strong anymore. So indeed, the ADP yesterday, it was the very first negative reading since March 2023. And that's why it was interpreted as a downside signal for the NFP today. However, I'm not quite sure whether we should rely on it, because the correlation between the two indicators has detected and changed significantly lately. But because of the DP, we have seen that the markets have increased, let's say, the odds slightly for a possible rate cut on July, but just 25%. I mean, still there is based on the Fed Watch, we still see 75% chance for no action at all, no change in the policy in July. And that's quite logical, because the Fed has clearly, Mr. Powell stated in Sintra that we're facing a lot of uncertainty, I mean, from political perspective. And as long as the situation doesn't settle, then they don't really want to take any action. Now, regarding the NFP, as I said, guys, theoretically speaking, any indication of any lower than expected number tend to give the room, let's say, for the Fed to proceed with its rate cuts. Whether it will be enough for the Fed to proceed is a different story. I don't think it will be enough, but it's what the markets think, right? And what the market speculates. So a massive miss, let's say, of the NFP today is, theoretically speaking, is giving the, let's say, the go signal to the Fed to proceed with the rate cut. And that could change the odds. In the Fed Watch, we could see a change in the odds. So we could see a rising, increased possibilities, probabilities for a rate cut in July. Something that could add further room on the downside for dollar, theoretically speaking. On the vice versa scenario, we could see dollar gaining some ground. So very, very briefly. But what's going on right now? Let's see. As you can see, we have seen that Euro got a bit overbought ahead of the NFP data. So 115, let me just see, 170, so 117.80, right? Yeah, 17.80, currently. Okay. So, and that's quite interesting, because let me just zoom out a bit. I'm gonna start from the daily, actually. Yeah, okay. Here we go. Just a second. So I'm gonna measure this. I have a swing, this latest up leg, just for the sake of finding appropriate support and resistance levels. So the immediate support level of the day is the 117.45 level, previous swing high, repeated resistance level over here. Okay, so that's the very first immediate support level. Okay, we have some consecutive bearish candles, as you can see in the 1 hour chart, and the momentum is actually neutral, we should say, ahead of the NFP. But yeah, turn to negative, but the signal line is still above it. That's the very, very short time frame in their 30 minutes chart. But stochastic also started pointing lower. So ahead of the NFP, just a few minutes ahead of the NFP, guys, we have seen that there is an overbought, let's say, euro. So that's quite key. Because it seems that euro gained momentum ahead of the NFP. Anyways, overall euro gains. Euro lost momentum against the dollar ahead of the NFP. But overall, the euro dollar has been in a strong rally for weeks now. Actually, for weeks now, has been a clear upturn. Nonetheless, let me just check your questions as well. Gold, shall I keep gold ahead of the NFP? Let me because I see a lot of comments. Let me just find my gold setup. Here we go. That's the Heiken Ashi one. And I have my candlesticks. Yeah, I have my candlesticks as well, which is, we've seen a nice support level. That's the very the 30 minutes chart, guys. Okay, 30 minutes chart for gold down. It looks like a nice M formation, don't you agree? An M formation, not confirmed yet, but that gives some idea, an idea for later on once the data are out. So let me just scroll up to your question. So the Busiso dollar yen. Repo dollar yen. So let me put a star so I will not miss these questions. I cannot tell you whether you will buy or gold or sell gold. What I can say right now, okay, is that there is, even if I use Heiken Ashi, or even if I don't choose Heiken Ashi, the only thing that is certain is that I see a strong support level intraday. Okay, you can see that also over here at 33.42, 42 level, 42.90 level. Okay, so a move below it could open the doors to 33.30 territory. Okay, while the momentum, guys, intraday, let me see, stochastic has flattened. Okay, let me check the Heiken Ashis as well. Doji, parabolic SAR at the top, RSI consolidating at 50. So you can see it's a clear indication how uncertain the markets are right now, the market participants. There is no yeah. Okay, how many? So 5 minutes left. Okay, hi. Right now, I have gold in a 5-minute chart, and we have seen that there is some boost on the upside. However, what keeps me skeptical is the fact that we are 5 minutes away. We have seen for the last 10 minutes a bit of an appreciation, but momentum remains negative. This is what I'm skeptical about. I'm wondering whether this is an indication that on the announcement we're going to have a spike up, just because of the market noise, basically, mainly. But this is just the fact that, okay, actually, RSI, the same. Let me use the stochastics as well, just to help me beat that. Yeah, so stochastics, they are ready to turn, actually. They're ready to turn, but this is just a 5-minute chart. So bullish candle, another bullish candle, no indication for a reversal yet. So it seems that in the very, very short time frame, we're referring to scalping, okay? Over here is a 5-minute chart. It seems that ahead of the data, just few minutes, 4 minutes away from the data, there is some appreciation, some boost or some speculation on the upside for gold, indicating that they are like bearish on dollar over here. And I'm gonna try to have also the data in front of me. Share screen, replace screen with the entire screen. Okay, and I would like to have over here the HFM calendar, guys, just to keep an eye on the news. Come on, there's not much time left. 110 expected, so I'm gonna leave it over here. Let me see the questions in the meantime. I'm afraid today, guys, there is so much uncertainty that I don't know how many people they will actually trade the news today, because it's what I said. I said it earlier to my colleagues. It's difficult today, regardless of the number, to interpret the whole situation. Because even if the NFP is okay, is missed expectations, let's say, suggesting that Fed can cut rates, but still the Fed has plenty to face. It doesn't mean that they will actually deliver a rate cut just solely based on the NFP today, because we still have ahead of us the pause of the tariffs on Tuesday. We have the tax policy from Mr. Trump. We have the spending bill because of the U.S. debt situation. We have the threats with USJ Japan overnight. Mr. Trump was threatening Japan regarding the trade negotiations. So what else? I mean, it's not easy. And also we have the fact that Fed, with a new appointment, with a new president appointment, the replacement of Mr. Powell, we cannot be sure that for the rest of the year the Fed will be independent like it was so far, because Mr. Trump announced already who he wants to be who will be the next Fed president. So will the Fed be an independent body like it used to be so far? So we have plenty to think about. So it would be difficult for the markets today to interpret the data. Okay, the data route. Come on. I don't see any action in gold right now. Not yet, at least. Come on. The overall trends, guys, the daily trends, the overall trends shouldn't change, okay, from the release today, just now, right, actually. So it's just the first market noise. So the dollar, the overall downward pressure on dollar will not change, okay? So, okay, gold spike lower, 33.42.60 was broken, which is in the 5 minutes chart. It was the very immediate latest swing low. So boom, down, just a breath above the 33.30 that I was talking about earlier. So the very first reaction is on the downside. That gives the room for the dollar to breathe a bit. So the numbers, come on, that's a bit delay, sorry. That indicates like a strong number. What's wrong? Let's see. Okay, 147K. That's why initially this is a reaction, because it was above expectations, revised higher as well. Okay, hourly earnings down, revised lower. So wages basically detected, unemployment rate detected as well. So okay, so that's a no-go for the Fed. Simple as that. It's a no-go for the Fed. Okay, it's not. I mean, it's not a huge surprise, but it was enough for this first very initial reaction that we have seen, either on gold or I guess in dollar as well. I mean, dollar should have found some ground on the release, just slightly at least. Where is it? Yeah. Okay, that's the 15 minutes chart. Sorry, 15 minutes chart spiked to 96, 95. That was on the bit, but the number is not huge. Okay, it's not huge, but it seems that because it was higher than expected, that's why the dollar over here found some ground. But the question now is whether this will be a limited reaction because nothing else changes. I mean, from the market condition perspective and with all these uncertainties that we are facing. Okay. So the markets reacted based on the theory. Higher number implies is bullish for dollar. A lower number is bearish for dollar. That's the very first reaction, at least. So there is, it seems that some pending orders have been triggered. Can you see, guys? Some pending orders have been triggered at, let me just, here. Let's put the 15 minutes chart to show you, to demonstrate it to you. Some pending orders have been triggered above 96.50 and more have been triggered at 96.60 level. Okay, so that's why we've seen this spike. So actually it's already like halfway. You see that? It's already halfway. It's already, if we measure this candle, this is a 15 minutes candle. I repeat, 15 minutes candle. Let me put it on. There you go. Let me measure this candle, okay? Just to see. You see, it's already below the mid of this spike. So that raises questions whether this was just the very, very first reaction and whether it will be a limited one, whether it will return back to the levels that it used to be so far today and so far this week. So it was just the very first reaction. Let's go down to the 1 hour, the 1 minute chart, even though it's something that I am not used to do. So that was exactly, there you go. That was exactly on the release. You can see for 1, 2, 3, 4 minutes in a row, we have seen on the upside, but now there is some limited, let's say, performance. I mean, there are some lower tails seen. Let's wait and see. Let me see again the data. It seems to me that might end up like a reversal back to the normal levels, let's say, the 96.50 territory, regardless of the bid that we have seen, just for the fact that just because of the fact that there is no, we still have as main drivers and factors that drive the dollar lower. We still have the tariffs, the geopolitics in general, the trade relationships, and the US debt. Okay, so we have a lot of uncertainties. The overall outlook is not changing. Now, let me check one more time the data just to see whether I missed anything. So lower hourly earnings, unemployment, bid expectations. So it's a no-go. Yeah, definitely a no-go. So that increased the odds basically that in July we won't have any any changes at all from the Fed. So that should provide some kind of a support for the dollar, but limited one, especially because we need to see the situation with Mr. Trump. I mean, Mr. Trump keeps stating that Mr. Powell should resign immediately. Mr. Trump still, monopolized the markets with his trade deals and his trade threats. So it's not only about the labor data, it's regarding the overall situation, as I said earlier. So let me check one more thing. Let me see, before I see your questions. We'll check the Fed Watch. Fed Watch. Okay, guys, so Fed Watch. Slightly higher in the odds for pause in July increased even more. Okay, they used to be at 74 this morning, now it's back to 77%. So yeah, it's because of the data anyway, but yeah. So let me see your questions. Let's get back to gold, right? So let's get back to gold, because Jesus Christ, a big bit. Okay, I don't know how many of you heard when I taught you that if the 3340 breaks, the next support will be at 3330, which was already broken, and now it's heading towards 3300s. So you need to keep an eye on the 3300s level. That's a massive candle. And let me put the 15 minutes chart as well. Okay, the 15 minutes, it's halfway still, but yeah, it seems that the momentum has changed, and it's like it points further on the downside, and at least in the very, very short time frame, guys. Oh, first support done, second support hit, already reached, and the third support is the 3300s territory, which is a round number, and it seems that RSI and the short-lived stochastics that I have in the 30 minutes chart support a possible move as low as 3300s, which is a round number. Let me just would like to also, yeah, that was already hit, so it's done. Oh, sorry. Let me also, yeah, that's a nice confluence with the 161 Fibonacci level. So 3304, 3300, the very next support level. There is further room on the downside in the very, very short time frame. Let me check the Heiken Ashis as well. So we need to wait a bit for this candle to close. But if I zoom into the 5 minutes chart, down, parabolic SAR, agree with further decline, MACD turn negative, stochastic still points further on the downside, RSI the same. So it seems that there is still some demand for the dollar against the gold. Okay, so there, of course, it went crazy for sure. For sure, it went crazy. The thing is whether this moves, this initial market noise will be sustained or not. So some of you were saying that selling gold or buying gold before the data. That was before the data. Guys, you should know that I'm not allowed to say anything regarding your what you should do. Regardless, I cannot give signals. Okay, I'm not allowed to. So I'm trying with some analysis to help you decide what you would like to do. And obviously it depends on your time frame of what kind of a trader you are. I mean, that's why I'm jumping from daily to 4 hour to scalping in a 5 minutes chart. So I'm trying to cover as much as I can. It's not easy though. Buy and sell at the same time, says Jonathan. Whichever one goes further, you close the loss like for more. So you're basically a hedger, which is not a bad thing either, but be careful. Always have a stop loss and try with your hedging strategy just to cut your losses short or cover your losses with more profit. So pending orders help a lot, because if a pending order has been triggered, it means that you have an automated position open, okay, and the other one, which will be on the exact opposite direction, could be deleted. You could delete it because obviously one of the two has already been triggered, if you get what I mean, Jesse. Yes, I'm gonna cover pound again as well. I saw pound Swiss was quite interesting as well today. If you buy, I'm not quite sure. Okay, I can see your comments, Agnos. You're telling me that HFM has, basically tries to do the exact opposite of what the clients are doing just to benefit. My dear friend, we don't control the market. Simple as that. We don't control the market. I mean, this market is a 5 billion per day traded. Yeah, five, maybe more than 5 billions have been traded financial markets every day, and definitely HFM is not the one that moves the market, but it's the big boys, it's institutional players, big hedge funds, big banks. I mean, everyone, Goldman Sachs, JP Morgan, all the big banks, governments. Okay, they are market participants. So definitely, it's not the retail sellers and retail traders that move the market. So I don't know what theory you had over here, but this is actually, if you go right now into the exchange, you're going to see the same thing. You're going to see a decline in gold. So I'm not quite sure what you're saying over here. So, I mean, the brokers, it's not just HFM. No broker can move the market. This is what you're implying. So 1 minute chart. You want me to show 1 minute chart? I mean, tell me, enlighten me. I might have not understood your questions or your comments. I mean, this is the 1 hour chart, 1 minute chart in gold. 1 minute. So there is still further pressure. 33.11, MACD is negative, RSI 20 still a bit flat. So I'm not quite sure. Okay, Bitcoin. Yeah, I might misunderstood something. I don't know. He was thinking about. Okay, I see. Angus, okay, obviously you didn't have the best experience with online trading in general. It might be with us as HFM, it might be with every single other broker. I don't know. It seems that you don't have the best experience, and I totally understand it. Okay, at the beginning, it's very difficult for everyone. I mean, markets is not something easy. Online trading is not something easy. It's a very risky environment indeed, and I totally understand it because all of us went through these similar difficulties. Okay, so what I advise you to do, okay, what I advise you to do, because I can see that you, you didn't have the best experience. What I advise you to do is stop everything, stop any trading that you're already doing. Take a step back, okay, and find out what you're doing wrong, okay, because at the end it's us as traders. I mean, each one of you guys, each one, including me, whoever's participating in the market, at the end is our decision whether we want to buy or sell, whether we're going to put our stop loss that high or that low, or whether we're going to have a position of a full standard lot, or whether it will be just it will be, if you're struggling in general, if you had a bad experience, take a step back, start educating yourself from the very beginning. We have so many educators in our company. I mean, there is no charge or something. They're not going to provide you a fee. Either go back on demo account and see what's wrong, because it seems that something's wrong. I don't know whether it's your strategy, is your psychology, emotional driver, or something. I cannot really tell, but all of us went through what you feel right now. Okay, you feel that you were doing everything correct, but it's the broker that that actually is against you. It's not like that. I mean, we cannot control the market. Simple as that. Yeah, better. I don't know if you are. I don't know who your agent is, but please contact our education officers, and they will help you as much as they can. Before I said market don't move without checking or show how it moved. Predicted right. Well done, Kumaho. It is indeed the hedge against the inflation for sure, and is here before that gold is a hedge against USD before NFP. Okay. Nonetheless, guys, this is a 1 minute chart. It seems that this decline, it's like it reaches its end. It seems. Let me just double check. Yeah, it seems that the dip. Okay, this candle, the 30 minutes candle, has not closed yet, but I can see from the 1 minute candle is that it's like we have the end of this sharp decline. There is a bit of support, some support, not significant enough, but it might have entered a bit of a consolidation right now. That's just a 1 minute chart, nothing really exciting over here. So let me just, there are a lot of comments today, a lot of but it was a tough call today. It was a tough call. The thing is whether it will be sustained. Based on the fundamentals, these moves should not sustain, should not be sustained. Okay. Let me see. There are so many questions. Yeah, this is what I initially said. I said, I don't know whether you have been here connected in Pyro, but I said that today, especially today, the trading the news should be avoided. But okay, it's up on the preference of each one of you guys, and whether you have some kind of a strategy that works perfectly ahead of the NFP. But it wasn't an easy call today. It was really tricky. So I guess many people try to avoid trade the news today. But for anyone that is an experienced trader on trading the news, and it has an adequate strategy, an adequate risk system that holds quite strong in such a data releases, why not? It's about the discretion of the trader. Are you asking about gold and Maurice? So the gold has declined simply because gold has found some ground. Why gold has found some ground? Simply because there was a bit of expectations for the NFP, a higher NFP number. It means more jobs of what was initially expected. More jobs suggest that economy is doing quite good. Okay, and that, it's all about theory, and that means that the Fed is doing something right and there is no need for it to change it. Okay, so which is not exactly the case with the US economy lately. But let's say the higher than expected numbers in NFP is a bullish indicator for dollar. That's why gold declined. A mist of expectations is a bearish indicator for dollar, and this is when gold could appreciate more. However, as I keep saying, this move looks limited. The fundamentals are not in line with a weak gold and a strong dollar. Nonetheless, this is not the case. That's why it would be very interesting as soon as the market noise is out. So the market noise is the very first 15 to 30 minutes after the data release, okay? Is when we see a lot of volatility, but the actual direction will be clarified as soon as the market noise is out. And if this very first 30 minutes candle, okay, close well above the bottom, okay, so close higher to the open price or even halfway, that would be indication that this might just was a market noise candle, and that it ran out of steam already, simply because the rest of the fundamentals, and I did said what I mean. It's all this, the fact that next week we have the end of the 90 days pause. What that means, it means 9th, early, on 9th is when we have, sorry, it's on the 9th is Wednesday. I think it's Wednesday. Early Wednesday morning, the tariffs are back in place, are back in activate. That will be activated again. Okay, that's the one thing. The other thing is whether over the weekend Mr. Trump will manage to let's say achieve any further trade deals. Also, he threatened that he will not extend the deadline further, so 90th of July still holds. Also, don't forget that don't forget that we still have the tax bill. Okay, he signed Mr. Trump basically sign a tax and a spending bill, right? Okay, so right now we wait and see whether this will pass. Will pass from the U.S. The U.S. House of Representatives will pass this deal, and what that means, it means that this will allow, let's say, to Mr. Trump's lawmakers to self-impose July 4th deadline after negotiating all night long. So this is still on whether they will move towards supporting this, how he called it? He called it Big Beautiful Bill. Basically, this beautiful bill includes many tax cuts. What tax cuts mean? mean the corporate sector will be appreciated because lower tax means more profits for companies. So it means more profits for the stock market, means boost of S&P 500, NASDAQ, okay? So that's why it's crucial to see whether they will manage to agree and to vote Mr. Trump's cuts, the tax cuts and this spending tax and spending package that he signed. And this is something that will boost stocks higher, okay? But it could, on the flip side, it could add further pressure on the dollar, okay? So have this in mind. What else? Let me see your question. And what can boost towards bullish market? I mean, okay, let's wait and see. Okay, so let me just, as the 15-minute chart. Bam, bam, bam. I would like to see, okay, bam, bam, bam. Some appreciation. That's gold. Ignore me for now. Just a second. Dollar index, dollar index, dollar index. Here we go. Okay. The 97 has not broken yet. The asset is still consolidating at the highs that we have seen during the release. Okay. Okay. Perfect. So, the person is emotionally driver, which is very logical because we've all been there. It's not easy. Definitely, it's not easy, guys. Trading is like business. No, it is a business. It's difficult to excellent on it. I mean, it's a proper work, and we need to work hard. I mean, even for me, I've been all these years in the financial markets, and I'm still struggling. I mean, today for sure it will have been something I would never consider taking a position. I mean, it wasn't easy. I mean, I was saying that to my colleagues earlier that I wouldn't trade the news today because I don't know how to interpret it. Simple as that. I mean, okay, market noise at the very beginning. If someone is trading just poorly on the technicals, 1 minute, 5 minutes chart scalping without ignoring the data and just poor price action just on the market on the very initial reaction. That's okay. That's okay. But I mean, it's not. I couldn't find how the markets could interpret potentially the release, because whatever the exact will be, the positive or negative, the situation is not really changing for the dollar. The dollar has been one of the losers of the whole year and is expected to remain one of the biggest losers of the year, simply because of the tariffs and how this has impacted the economy of the market, and simply because the investors, the big investors, they didn't want to have a significant exposure to the US markets because of all this uncertainty around Mr. Trump and his policies and his agenda and his threats and etc. etc. That's why they shifted elsewhere. They shifted and invested into Europe. They shifted and invested into Japan. So over the very first half of the year, we have seen investors turning elsewhere in an effort not to have US exposure. So this is not something that will change anytime soon. Okay, so I have placed sell on euro yen. On euro yen. Yes. Oh. And buy on euro dollar now. So you put it 15 minutes ago. You put a sell on euro yen and buy on euro dollar. Okay, this is euro yen. There was this big boost. Indeed, the market is overbought, so I can see where what you're doing over here, Sifi. So yes, you have seen that overbought conditions. Um, Overbought conditions. Okay, so let me change the template as well. So over here, no, that's not helpful. So yes, okay, I see what you're doing over here, but I'm not quite sure, to be honest. MACD is still negative. Your stochastic is above 80, and it hasn't really turn downwards yet. RSI though has flattened, so that's okay. It's overbought anyway. We'll need some kind either of consolidation or a slight pullback, but I don't have the go sign for a pullback. Let me put the no. Okay, which time frame, Sifiso? Since you stated and you show us what you did, what time frame? Okay, I can see it's overbought, consolidated. This is a 5-minute chart. Consolidated, the return back to the into the Bollinger Bands. MACD is positive. Moving average is positive. RSI is flat. Stochastic is still above 80. Not the slope is not significant. I mean, it's not pointing on the downside. It's more of a flat. So that suggests that there is further room on the upside if you are in a such a short time frame, such as a 5 or 15 minutes chart. Now, if you are more of a medium term trader and etc., there will be, as I said, some it's overbought. There is few further room on the upside. Overall, though, euro yen has been in a strong, nice uptrend, and with the fact that it has just beat the previous resistance at 170 level, so basically it extended, managed to break and extend above 170 level, which is a round number, suggests that the overall outlook is positive. So be careful. I don't know your time frame. I guess you did that because you saw these overbought conditions, but this indicates, this is again the 5-minute chart. Okay, I went back to the 5-minute chart. So euro yen, let's summarize. Euro yen overall remains in an uptrend, broken 170 so far today, clear uptrend for the whole month, for a month now. Intraday, but basically in the very short time frame, such as a 5-minute chart, what we are seeing, overbought conditions, so the need of a pullback. It seems that the pullback has already done in a correction, basically in a consolidation form. The asset sustain a move above 170, okay? So that suggests that there is more of a consolidation before another attempt further on the upside. This is what looks to be the case, okay? Yeah. So let me see. Connecting the hellos. A flattened, an ascending triangle with a flat top. Okay. An ascending triangle with a flat top. The real resistance was here at 169.83. And I'm going to measure it as well, just to see our potential resistance levels if these move continue on the upside. So at the top of the hour, okay, we can get a confirmation whether the rally will continue. If it continues, okay, then that could open the doors to 171 or even 172 level. I don't know. I know that it doesn't look that good. Let me show it to you. Here we go. So it's an ascending triangle with a flat top. That the 169.80 territory has been retested several times, but it was broken just now, just earlier, just the last hour. Okay. So key right now is to see whether it will hold above this move and extend higher. And if that happens, then there is further room on the upside for dollar yen, because anyway, the overall trend is on the upside, right? It has been on the upside since 23rd of May, and there is further room on the upside if you check the daily chart, okay? So, intraday now, actually in the very first in the 5 minutes chart, pullback has been seen, corrected, is back into the moving average, into the Bollinger Band area. So yes, I think it was a wrong call, Sifiso, unless if you were trading 1 minute chart or something and you have seen these overbought conditions and you decided to trade this pullback, let's say this decline, this pullback. I would say it's not decline, it's a pullback. Euro dollar, you mentioned euro dollar. Oh, okay, nice. Okay, this is Heiken-Ashi one and a non-Heiken-Ashi one. We can see that 30 minutes chart, by the way. Okay, this is the 1 hour chart. Okay, let's start with the 1 hour chart. Can you see that this used to be a nice resistance zone, then turn into a nice support level? And this zone has been broken, okay? It has broken. I'm going to put a line on it just for simplicity. The asset closed below it, moving average bearishly cross and point lower. There is some stability right now. We found some ground, okay? But it's not enough for suggesting a reversal back to 117 highs or 118 level. Now, yeah, this looks that it could we could see further another retest, let's say, of 117.20 level. It seems that there is not enough support, there are not enough bulls in the market in order to push euro dollar in the very, very short time frame higher. So you can see from the RSI, it's corrected a bit, but it's still into the oversold territory. So for the time being, there is no indication that it will return back to the highs that we have seen so far this week. And the interesting thing is, like, let me measure it. Okay. This is our very, very next support zone. So from 117, round number, between 116.85 and 117 is the next support level if we have confirmation that it will extend further on the downside. So let's check that's not enough. That's not a sign of a reversal yet. It's just a 15 minutes chart, not really significant candles. I mean, that's a really dodgy one. That's not done yet. This is a dodgy one. Big tail at the bottom, small body, suggests that the bears are still fighting, okay? Let me see the Heiken-Ashi one, though. Down, yes, no tail at the top indeed, but look at that. The tails are so close to each other, and actually the next two, this is a 15-minute chart in euro, the following two were higher than this one. So that suggests that there is a bit of a fight between bulls and bears. Bears are still in control. So let's wait and see. Let's wait and see. Parabolic SAR remain at the top. MACD is negative. So let's wait and see. The fact that they are so close to each other and actually higher indicates that at some point we're not going to see any further room on the downside. Actually, we might see a reversal instead, but I'm a bit skeptical still. Yeah, so let's wait and see. Okay. Guys, just for clarity, okay? If the asset, let's assume that you are a 30-minute chart, or it's up to you, 15-minute chart, 30-minute, whatever. Let's stick on the 30-minute chart for euro dollar. Okay, this candle will close in 18 minutes from now, okay? If we see it like, posting consecutive closures below this key support, the 117.46. So we keep having the price action moving below that level and the candles closing below that level, that indicates that there is further room on the downside. However, this room could be a bit limited, as I said. Okay, the next support level, if and only if the asset sustains a move below 117.46, it would be the 117 and the 186.85. That would be a very crucial support zone for euro dollar. Is not expected to extend below that. Okay, this is where it could find support. It's unlikely to break euro dollar lower, to extend euro dollar lower, simply because the fundamentals are not supporting something like that. We're still gonna see strong euro against the weak dollar, unless if something, really surprising happens from a political perspective. But euro is doing great and is expected to continue gaining momentum against a really overall weak dollar so far this year. And actually, remember what we keep saying, the dollar, regardless of today's situation, dollar could extend this year up to $90. So the overall outlook remains negative. Okay, dollar over here already started easing. 96.80. Yeah. Okay, let's see. So, okay, I will simplify every time, Movies, just do some homework ahead of the NFP, find your immediate support and resistance level, put some pending orders, one pending order in case that it breaks, let's say, the top of the resistance, another pending order if it breaks, and leave things as they are if you wish to trade NFP. Pending orders with predetermined support levels, predetermined stop loss levels, predetermined entry levels, predetermined target levels. And the one that is triggered on the announcement, then delete the other one that is in a different direction, okay, in order to avoid both of them to open automatically with this way. So if you really would like to give it a try, but very, very careful if we want to try ever to trade the NFP. Not massive position size. Calculate everything beforehand. Before you do anything, calculate. Try to predefine how much you're willing to risk. If you want to give it a try and say, okay, I have $50 and I want to try it. So open a position equal to this amount of money, no more than that, okay? do your homework. I think in the mobile app, instead of putting a stop loss, I mean lots, the position in lots, you can put it in a matter of dollars, so you can easily you can easily set that predefine that in this trade I'm risking $10, $15, no more than that. Okay. 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 Again, this is based solely on each one of you. Okay. Because unfortunately, I will say, trading, and not only trading, anything that is related with money, anything, okay, unfortunately, it affects our emotions. We are human beings, as I keep saying. We get greedy, we get stressful, we get emotion, and if we get into that loop and we're getting because it's our own money, right? It might be your savings, it might be, but money is money. I mean, we're human beings, and because we there is a connection, I mean, with the money, especially if it's your own savings and you work hard to save that money. That's why there is an emotional bond with money. That's the tricky thing with business in general, not only online trading. Controlling your own self. Controlling yourself. That's the thing. That's the trickiness. That's the difficult part, that for some people it takes years, from others it takes months. So, and actually will never stop. I mean, you learn something new about yourself and your reactions every day. The key, and something that it will help eventually to become a profitable trader, it will be your emotional control. If you achieve that, then that will be that will be more than 50% of your success. Okay, because I mean, study the theory. It's easy. Try different strategies until you find the one that fits your needs, your time frames, your preferences, etc. Again, requires time, but so and so you will find the strategy that works for you, and you will start adjusting it. You can keep a journal. I mean, practice makes perfect, as usual. But the most difficult part of all is emotional control. Okay? Emotional control. Because even if you have a risk management system, I mean, a predefined plan on how much you're going to spend a day, how many trades you want to open a day, how much, let's say, money you're going to risk per day. Even if you have all these limitations that they will actually help you to control your emotions, if at the end, due to a losing trade, you change your stop loss, and on the belief that okay, I'm losing, so I should I should drag and drop my stop loss lower, so we'll stay in the market because eventually we'll turn my direction. That's a wrong mentality. Keep your system as it is. Don't touch it. You had a predefined risk management system. You had set you have placed your strategy. Leave it there. If you don't want to, then cut your losses short and get out, calm, and come the next day with a clear head. That's why the thing is the emotional control. The risk management plan, having a risk management system helps. But at the end, even if you apply that risk management system, but you go and touch your targets or your stop loss, and you're dragging them down just to stay in the market, or you're getting your targets higher because you get greedy, then nothing matters. It's you. It's your greediness or your anxiety. So it's here. We need to work. This is the difficult part. Okay. This is our biggest enemy, as we keep saying, is our own self. Okay? This is our biggest enemy. And I think everyone here will agree with me. The biggest enemy is our own self. Sometimes we are boycotting ourselves. I think I replied to this question, dear. Yeah, so indeed there was further room on the upside. As if you saw, I think we've seen euro yen already, and euro dollar, Bitcoin and repo. Yeah, I know that is your favorite. It's your favorite ones, dear Zibusiso. But there was so much volatility in gold and euro dollar today, even euro yen, like Sifiso stated. So, okay, I haven't, to be honest, haven't touched Bitcoin lately at all, because I saw that it's in a descending triangle, it's in descending channel overall. So, and actually that remains the case. We have seen some lower highs, lower lows in a channel. Let's see how it reacted during the release. So, temporary pullback, supported though by the moving average. Momentum has detected. Okay, what do we have over here? That's interesting. This is a 30 minutes chart on Bitcoin. The thing here is I'm getting signs of a possible divergence. So higher prices since yesterday night, but lower indicators, both RSI and MACD. That seems like a divergence. Okay, so it looks like a divergence, a possible divergence. We cannot tell yet, but yes, too early. Okay, something to have in mind. Something to have in mind. Overall, though, my dear friend, okay, today the day was a bit cautious. It's at the top of the channel. The channel is not ideal. I should change it a bit, to be honest. The more precise. Let me just fix it a bit. Should be somewhere. That's much better. Connecting. Highs connecting. 3 lows. Okay, that's a much better. That's a much better channel. So it seems that it has retested once again the channel, but with a lower high. So based on the momentum that I can see over here, and the so far doji Thursday, that could indicate that the rally is running out of steam, and that we might see a reversal back to 10300s level, okay, or even down to do the next leg. That is just food for thought for the remaining of July, and especially ahead of next week, because tomorrow markets are closed due to the Independence Day. Okay, this looks, allow me, considering the momentum, okay, the lower highs, the fact that it's in a channel, it could suggest the potential pullback with possible a retest of the mid-level and even the bottom of the channel. Now, intraday now, so the last 3 hours in a row, there was a decline, but it's supported, though the momentum is weak. So, is weak. It seems more of a consolidation rather than anything else. Yeah, really doji candle over here. Parabolic SAR shifted on the upside. So bearish sign. But no, it's not enough. No, it's a bit of a consolidation, I will say right now. In the very short time frame, we need further clarity. Yeah. it seems that they found already some support, so we could see some consolidation at that point onwards. Yeah. Yes. So repo. Here we are. Here we go. Sorry, too many lines. I know, too many lines. Actually, this is a nice support level, 1, twice, 3 times, 4 times. So basically, Ripple is in a ranging market. Since the end of May, it has entered this range from 207 to 234, 3360 to be more precise. MACD also coincides with this conditions. I mean, it's flat, it's ranging. So let's zoom into the 4-hour chart. Okay, nothing really supported slightly, improved slightly. 1-hour chart in general was a positive 2-day session. Higher high, higher low, a bit of a correction, another attempt to the upside. It turned a bit dodgy over here. MACD, sorry, stochastics point further on the downside. Yeah, so there is. The only thing that I can say for Ripple, my dear friend, is that on the daily time frame, it continues sideways. It's expected to remain the case, so keep an eye on any breakout above 123.60 because it could open the doors to 260 level, while any extent and break of 206.90 could open the doors to 190 or even 176.70 level. That's the overall outlook. In the very short time frame, such as like 30-50 minutes chart, we can see some bearish momentum. Parabolics are on the downside. Let me just, I would like the, what is the, yeah, that's it. Okay. Moving averages are bearishly crossed. MACD detected. Stochastic, I noticed earlier that it suggests that there is still some room further on the downside. Let me put it on. And my head is in the front, as usually. Okay. So yeah, there is further room on the downside. So, yeah. With the 2630, the next immediate support level is such a tight time frame. Yeah. Next support at 226.30 seems that there is further room on the downside, but not a significant one, okay? Not a significant one. So we're referring to the next few minutes, top of the hour. Gold, we did gold earlier. So recovered, it seems, some of its losses. Recovered some of the losses. Now this is a 15 minutes chart, sorry, for gold. Okay, this is, let me check something. Okay. Sorry guys, just a second, allow me a second. Okay, ignore, this is not so helpful. So there is the asset, it seems that it's trying to revert some losses back, which is what was expected anyway. I did say that these moves are not expected to be sustained simply because we have all the rest that just keep adding pressure on dollar and support the gold. and this is what seems to be the case. It seems that the markets are trying to recover some of the losses that we have seen in the very, very first initial reaction of the after the NFP. But we will need at least to see a move above 33, 36. Let me measure this candle, the big one, the one that it was during the announcement. So the 50%, okay, the 50% of the move has already been reverted. Okay, so that indicates that if at the top of the hour the candle close above 30 level, that indicates that it could get back to the high territory, I mean the territory of the week, back to 33.50 or even 33.65 level. So that was the key. The 33.30 was a key support level, as I did said initially in my life. So it was just a sudden attempt to break it due to the volatility, but quickly revert above it. That will be an indication that conditions, the same conditions still hold, supporting the gold. So overall, gold, as you already know, it's positive, the overall outlook. Okay, so that's not enough. So that's not the today's performance is not enough to indicate a potential reversal. Obviously, something interesting that you need to be aware for the ahead of the new week, because tomorrow it's a bank holidays anyway, it's the fact that we have an ascending triangle in gold. Okay, so have this that in mind, because you might need it as soon as we see either an extension above 34.45, or if we see for any reason, due to a surprise or something, a move outside and below, more precisely, this triangle. That's something that you should have in your charts in the long term, in the daily chart, for the rest of July, especially for the ahead of the new week. So currently, guys, gold tries to, the bulls are trying to, as I said, revert some losses. Indeed, it seems that from the momentum perspective, the decline is over. It was limited. Okay, this seems to be the case. I mean, moving average are also like pointing on the left-hand side, on the right-hand side. RSI is above 30. Stochastic the same, is a bit neutral. Okay, let me see the Heiken Ashes as well, just to double check the momentum. Yeah, so higher low. I know that it's a bearish Heiken Ashes candle, but the tail is way higher than the previous. The current one is way higher than the last two as well. Stochastic has been improved, RSI the same. Moving averages suggesting that this decline has run out of steam already. So 2 consecutive bullish candles in the 30-minute chart in gold could indicate that the asset will return back to the 33.50 or even 33.65 level. We should see appreciation already. Yes, that's it. Yeah. Okay. True. Okay. What else? Guys, in periods like that, in which it's not easy to interpret the data because other things are ongoing, such as the politics, it would be always wise to follow the trend. Keep always start with the daily picture. See whether you have a nice, strong trend, either to the upside and downside, and whatever you decide to do, remember that trend is your friend. Okay? So it's always wise to follow the trend than going against it. Unless if your system allows it and you're an experienced one and you can you're like you want to benefit some short leave corrections or pullbacks, etc., etc. But sometimes, especially in periods like that, if we have a clear trend in place, uh, you need to always have at the back of your head whether your decision goes along with the trend or against the overall trend. Okay. Similar with euro yen, that um, um, where's euro yen? So, that Sifiso said. It was brilliant for you. I mean, that you noticed this breakout of euro yen. But at the end of the day, my dear, euro yen has been into the upside for since the beginning of May. Okay, has been a nice uptrend since the beginning of the day. So of May, sorry. So this breakout, in this 4 hours, the last 4 hours, this breakout above such an important resistance level suggests that the trend will continue. Okay, that's why I measured the base of the trend line and I put an indication on where it could go eventually. That's the daily chart, that's the 4 hour chart. It might take a few sessions for it to reach 171 and 172 level, but it's just an indication because this is a strong bullish candle. So the only need that we need over here is just further confirmation. Okay. I understand that you noticed that it was a bit overbought and it needed correction, but that correction lasted for 10 minutes. 10 minutes, another attempt to the upside. Correction now is turning back on the upside. You see, it sustained this support over here, repeated this sustain above this swing low. So higher, high, higher, low. So even if we put like a tiny, sorry. That's a 5 minute chart, by the way. So, yeah, higher high, higher low, correction, overbought, correction, another attempt to the upside, correction, and is now ready to do another attempt on the upside. Overall trend, though, remains on the upside. So another bullish candle could indicate that the asset resumed its upwards trend that is ongoing for more than 2 months now. Okay. Didn't I do that? I did that. And then to Bitcoin. I did Bitcoin, I did it. Yeah. Yeah, it was the very first that I did. It was the very first one. Okay, anyway, the analysis will stay in the recording, so don't worry about it. So, guys, we've been more than an hour live, an hour and a half, 30 minutes nearly. So, if you have any questions, now is the time to let me know. Otherwise, I'm gonna call it a date. What else? Let me see a bit the news. Let's get back to. Let's get back to the. Where's the Haikenashi one? Euro, yeah. Someone asked, I think I missed some questions. Oh, Leslie, I'm really sorry. You asked about pound yen. You asked about pound yen. Really sorry about that. I had it pinned and then I forgot about it. Should be somewhere here though. That's nice. That's pound Swiss in 1 hour chart with indication that it could return back to 108.90 level. Okay, that's nice. A pound Swiss, by the way, this is not pound yen, this is pound Swiss. Everything point further on the upside, parabolic SAR, moving average, next ceiling could be seen at this triple fractal high, 108.91. Strong bullish candles, higher tails, higher bodies, bigger bodies, sorry. So that's nice. The 1 hour chart, pound Swiss. Let me put on also my pound yen. Woohoo! Hey, similar, very similar. But the thing here, it has already broken that's actually right, like a rounding bottom, a really bullish pattern. So broke is a rounding bottom, right? Which is a bullish pattern. Moving averages are keep pointing further on the upside. Parabolics are also indicates a bullish, further bullishness. It broken this previous resistance level at 197.50, has already broke it. So it seems that it's very further room on the upside for pound yen intraday. Oh my god, that's why you wanted it, Leslie. I'm so sorry. So sorry. Hopefully you had a nice Zibusiso, yes. Okay, give me a second. Okay, so yeah, stochastic also, as you can see, there is further room on the upside, higher. Can you see that? It's posting higher lows. So only a break of this trend line over here could suggest a reversal. So it seems that there is further room on the upside with immediate support level at 196.98 level. Okay. So yeah, there's further room on the upside based on MACD, stochastics, parabolic SAR, bullish moving averages. This is for the pound yen. Yeah, even in the 30-minute chart, we can see that it's still in a bullish bias, and it still holds basically, and it should be somewhere halfway, right? Yeah, actually already broken 61.8%. Broken the 61.8 Fibonacci level from the down leg that we have seen since Monday. So confirm, let's say, a closure of this 4-hour candle above this level could suggest a return possibly back to the highs, to the last week's highs for pound yen. And let me get back to Bitcoin just for the position. I did my analysis earlier. Where is it? The rest of the... No, that's not the one. Let me just... Where is it? Where is it? Where is it? So... Oh. I think by mistake, I deleted my chart. The channels that I had. Basically, I had a descending channel, okay, over here. Actually, let me fix it. It wasn't like that. It was supposed to be. Sorry, it's not appropriate one. Much better. So I was saying that overall it remains in this downwards channel. Okay, the slope is not significant, but I know that it looks like it's like in a bullish momentum, but it's in a descending channel, and the momentum is so. I mean, it detected significantly, is nearly to zero. So it seems that this overall is entering some kind of a consolidation, neutral zone, or at least a very narrow descending channel overall. Intraday though, because you're asking me whether it will decline. So what I can see over here, sorry, what I can see over here intraday, my dear, just a second, okay. Is that okay? So from the overall outlook, it seems that is in this channel and it had reached already the top. So you need to keep an eye on a potential reversal. Okay, back to the mid of the midline of the channel, or even the bottom line of the channel. But no, this is something that it could happen today. No, I'm referring just to be prepared ahead of the new week. Okay, this is a daily chart anyway, but because of the decreasing momentum, that could be something that it could be seen next week. Okay, only it's like really big, strong breakout above the channel, and more precisely above 110, 111 territory could suggest that the continuation of, I mean, a rally for Bitcoin. So this is overall. Now let's jump into the 30 minutes chart. You're asking Bitcoin decline, Bitcoin also decline. Okay. So it seems that there is some, let me just put the intraday setup. So what we are seeing over here is is that the asset has gained some ground, retest 111, but just a second, that's a strong move. But it needs another 12 minutes to go, and we have okay, Zibusiso, listen to me. This is a 30 minutes chart, okay? I can see that there is some push over here in this 30 minutes chart, okay? And there is the possibility, because this is not closed yet, it hasn't closed, the possibility of a bullish cross over here that could indicate the retest of 111 or even 112.60 territory, okay? But this candle has not closed, so we need to wait for confirmation. Yes, so 15 minutes bullish cross, stochastic already breach overbought territory. So if I just zoom in, yeah, so there is in the very short time frame, there is some further room on the upside, it seems. Let's check what ATR tell us. ATR. So in the 15 minutes chart over here, ATR indicates 310, 310 points. 310. Okay, I see. So yeah, in the very short time frame, it seems that there is a bullish sign. There is some room further on the upside. But yeah, overall, you need to keep an eye on how the candle will close tonight in order to be prepared for the new week, because as I said, we might see the continuation of the channel. So now, as a bullish momentum, overall, it's been neutral to negative. Jesham official. There is the last 3 days. I mean, so since Tuesday, Wednesday, and so far today, euro dollar has entered some kind of a, let's say, consolidation. It was on the anticipation on the NFP, and in general, it's a short short holiday week. So that's what is led to these 3 days of consolidation. Overall, though, the asset remains in an uptrend. You can see that the MACD keeps rising, so there is rising bullish bias. Ignore stochastic for now because this is what I'm using for my very, very short time frame analysis. Let's check RSI. Fundamentals also support the strong euro against the weak dollar. The RSI also remains well above 50. That is like an upwards channel as well, an upwards trend on RSI as well. So there is a bit of a consolidation so far this week, and it's expected to like close the week, I mean, a bit dodgy, like somewhere around 170.50 level. But overall, both from a fundamental and technical perspective, this remains a very strong uptrend for that lasted more than 4 months now. Okay, so that could be, let me just check something. This was the latest down leg. So ahead of the new week, guys, please note that to this week's ceiling is the very, very immediate resistance level, obviously, right? And let me just so yeah, it's nothing really J-Smash. Even if I use the daily, the Japanese candlesticks, it's a clear, nice uptrend. Some correction. It looks like an Elliott wave. I don't think it is, though. Let me measure it. So, first one wave, second wave. No, it's not an Elliott wave. It's way too big. So, yeah, there is some consolidation. Okay, so because of the consolidation, your immediate support level ahead of the new week will be on the, here we go. It will be on the 170 territory, and on the upside, it will be on the, here we are, much better, 118.12 territory. So that's the immediate, based on the ranging market that we have seen the whole week. This is the immediate resistance support level ahead of the new week. Okay, but overall outlook remains positive. So as long as the asset holds above 170, okay, as long as it maintains the 170 level, the rally is expected to continue. If for any reason ahead of the new week or next week, if the euro dollar not only extends below 170, but breaks even the 160 level, then it could retest the 114.35 level, basically by connecting this latest swing low or using the 50-day moving average as your support level, you can see that in a pullback, okay, if the 117 level breaks, then this could lead the asset to retest the trend line over here, 115.40, 114.90, before another swing on the upside. Okay? So key support 117, ceiling 118.12, an extension above it opens the doors further to the upside. A pullback below and a confirmed breakout of 117 could open the doors to this trend line, which basically it could find support at 115. Let me be precise. Yeah, somewhere here. So 115.30 level. Yeah. Okay, guys, I'm going to call it a date. Thank you very much for attending. Take care, okay? I'm going to, as I said, I'm going to call it a date. It's been nearly 2 hours. It's too long. Have a great day ahead. Take care. It's a short week. Enjoy. And see you again on Monday. Thank you. Bye-bye.